What's going on, guys, and welcome back to the next video in this Elliott Wave series. Now, if you haven't watched the previous videos, go check it out just so you can get up to, catch up to us where we are at the moment. Now, the previous video before this was we were talking about Fibonacci in Elliott Wave. I was showing you guys where to look for, what we're looking for in Fibonacci, what retracements we're looking for, what extensions we're looking for. So, if you, like I said, if you haven't seen those previous videos, go have a look on the YouTube channel and look for the playlist Elliott Wave. The videos will all be there. All right, so let's get into this. Now, we've already, like I said, we've already broken down on sort of paper, let's call it that, or on the whiteboard, what we were looking for, what sort of Fibonacci ratios we were looking for in the Elliott Wave. So let's pop it here on the live chart. Now, if you guys have watched the previous videos as well, you would have remembered we had a very in-depth breakdown on Elliott Wave with Euro USD. So that's what we're looking at. We're looking here at the Euro USD daily time frame. Okay, so if you guys, just for a quick recap on this, okay guys, we had obviously waves 1, wave 2 to the downside. We see our 3 waves coming down, and we had a nice big extended third wave. We had with its internal waves as well. We had wave 3 back up here, then we had wave 4 with a bit of a flat coming down to here, wave 4, and then we finished off with wave 5. Now, if you guys remember on that sort of the first one, we were looking at the counting. We really went into depth into breaking down this 5th wave and looking at all the analysis into that. We also looked into this sort of zigzag pattern to the downside. We saw a double zigzag. So obviously now we have got W, X, and potentially Y. All right, so we're looking for a potential Y to finish off here. Now that means obviously we've got waves 1 and wave 2 coming up. So as long as we don't take out this low, we should be okay. At the moment we're sitting very close to it, but we'll see where it leads us to. Okay, if we do break it down, we're going to have to look at a bit of something else. Then we might see if we can see 1, 2, 3, 4, and 5 coming down here with our 3-wave structure to the upside, and then obviously coming back with a 1, 2, 3, 4, and 5, which could lead us to another structure, which is double X and Z. All right, then we can look at that complete structure, then knowing we've got overall waves 1 and coming down to wave 2. All right, so that's where we could potentially be looking at. But let's have a look at the Fibonacci index. So now that we kind of have an idea of where we are on the market, we can use our Fibonacci to see whether this is potentially coming to an end, or if it does break this low, where could we potentially be looking to go to. Now, if you guys remembered also the previous videos I was talking about, we mentioned that obviously on that previous wave 4, so like I mentioned, we've got wave 1, 2, 3, and 4. We can see the retracement coming back down to that previous 4th wave zone. So this again also helps us a bit. Now obviously it could break, and we need to be prepared for that. But let's dive into the Fibonacci with no further ado. All right, guys, let's pop it over. Let's get rid of this whiteboard, and we can pop over our Fibonacci. So let's start off here with wave 1. So what I'll do is I'll break this down into sections. So we obviously have the start of our wave 1 over here. We have got wave 3 will pop up over here, and we can just adjust them as we move on. All right, that should be fine actually up there. Wave 3, then we've got finishing of wave 4. We have got then our wave 5 up over here, and we also, let's do wave 2 as well. So we've got wave 2 right ending over there. Okay, so let's pop it over. Let's start off with our wave 1, and let's have a look at the Fibonacci ratios in there. So we'll zoom it in. We'll get over to our wave 1, which is right over here. I'll get rid of that. We can see low of wave 1, right? And we've got the beautiful zigzag pattern to the downside. Now, if you guys don't see that, we can see we've got a nice strong move to the upside. Then we've got a B, C coming to the downside, and obviously the internal waves for this wave 3 as well. All right? So let's have a look at the fibs. So wave 1, what do we look for? Wave 1, like I mentioned, is always the first sort of hesitant move in the market, the first, bit of movement that's started to change the direction of the market. And then wave 2 generally is the deepest retracement ever since the first initial move to the upside, okay? Because there's a lot of other people panicking. So we can have a look. So people are panicking, like I said, big strong move to the upside. Then people think, big first move to the downside, people panic. They think, okay, no, this was just a correction. Market's going to drop quickly to the downside. Then we see that push up. We started to see a bit of we see a bit of hesitance. And then the more we come down, we see how more hesitant it is down here. And then again, we see the power in the pullback. We sit on a support, and then the strength starts to kick in. We get a bit of a break of people who see a hit the double top, like we always talk about in those previous videos. The knowledge of Elliott Wave helps us. We see a big move to the upside. We see it come down, fails to break support, wave 2, and we see the market start. Hopefulness comes in, and then people started to close their trades, and we see the first initial pullback of our wave 4. Okay, now let's have a look at our zones. So wave 1, we start here at the bottom and pop it over here. Okay, so if you guys, I'm not sure if you guys can see. I might have to. I might have to zoom in a bit for you guys to see if you guys can see it a bit better. All right, so wave 1. We know that wave 2 is generally, like I said, the deepest one. Now, what we look for is between the 50 and the 61.8 retracement. But we also have the 76.4 mark as well. Now, like I said, in my experience, if I see the market go below this, generally, I tend to see it, continue further lower. Now, if we have a look here, we can actually see the low of this wave 2 hit just didn't go any lower than the 76.4. So nice deep retracement. We see a next bullish candle popping up. We see that big, strong bullish candle, first initial movement to the market, rejecting the area. So that's a beautiful potential target or potential zone to take our first trade. Now we know, like we said, we've either got two options. We can make a very tight stop loss, which has got a bit more risk, or we can have a wide stop loss, which helps us to kind of protect us a bit more if our count is right. Because remember, the market can still come down and go below the low of wave 1. So we've got two options, right? We can take the entry, stop loss just below the zone, look for the market right up, or we can take the entry, same place, and we can put our low below that low of wave 1. Okay, so that's the initial sort of place for us to move into. Now let's have a look for targets, right? So now we're looking, using the Fibonacci for potential targets. Let's delete that one. Now we're going to move on to our expansion. Okay. So I'm going to have to get rid of this line so we can have a bit of a better look to see where the low is. Delete. Okay, so there's the low. The low. And the low of that wave 2. Okay, now we can clearly see this wave 3 was extended, right? A very, very big extended third wave. We see it right there. Beautiful, right? There's our wave count, 1, 2, 3, 4, and 5. For wave 3 to go to the upside, a little bit higher. For wave 5 to go to the upside. And now we're seeing, like I mentioned, if we have an extended wave, we're either looking at 200 or 261.8. Remember, these are the extended zones, and obviously we go into 300 and 361.8. But what we see here is this market came just below that 261.8. So if you were looking to take this trade, right, remember where we took it? We took it just below here. Stop loss could have potentially been down here or wherever. Even regardless of where it was, look at the profit target you're making, right? Look at the massive move you're making. So if you were even to look at a regular wave 3, a normal wave 3, 161.8, that is still a massive risk-reward ratio. You see, entry, stop loss, take profit. Looks like just above 2-to-1 risk-reward ratio. Now, if you're hoping for an extended wave, we can look to start managing our trades. Once we see the market move across, right, once we see it start moving, we see waves 1, wave 2, obviously. So let's get rid of that. So we can see our waves 1, wave 2, wave 3 of this third wave. We can say, okay, now what we can do is we can move our stop loss to break even. Okay, so let's get our entries in. We'll get our entry points in here, okay? So we've got entry roughly around here, and stop loss roughly. Let's say we played it safe, all right? Let's say we played it safe. Stop loss below here, okay? So that's our stop loss zone, was below that low of wave 1, okay? Now what we're looking for is we see this fourth wave coming back down. We know the rules of Elliott Wave. We can't break into this initial first wave, which is on this, roughly on this 61.8% retracement. So we see now we can move our stop loss just below the low of that internal wave 1. Market continues up to wave 4. As we break this high, we can now say, okay, cool, let us, once we come past the zone, this 262, we can then move our stop loss into other areas and start moving. But ideally, I would say to not push it. I would have taken my target at this next 261 this 200 sort of mark zone just to be safe, because we've blown past the 61.8 and we're starting to see the market slow down in here, right? And also, like we mentioned, those wave counts as well. We had our internal wave counts of wave 5, so we need to really look at getting out this market. But if you didn't manage your trade like this, if you just went for the regular wave 3, beautiful risk reward trade, right? Just over 2 to 1 looks like it. Okay, don't say. All right, now let's have a look. Now let's move on, right? So now that we've finished wave 3, we can have a look at wave 4. So wave 4, let's get rid of this so we know where we are. Delete wave 4 retracement. Now remember, we've got an extended third wave, and the retracement we look for is 23.8 or 32.8. All right, so let's have a quick look. From the low of wave 3 all the way to the top of it, right over there, and our low we're looking for that 23.6, sorry, and 38.2. Okay, and that's exactly what we got. Now we didn't get on the dot of one of these, but you can see we did hover and right between these two zones. Okay, right in between these two zones. Now yes, if we had, like I said, we had a zigzag to the downside. Let's change this color. We had a zigzag to the downside, right? A, B, C. So yes, once the market broke past the zone, you could have potentially looked to take a trade. Now, unfortunately, you would have gotten stopped out, right? You would have gotten stopped out, which is fine. And then again, we saw a nice big move above that zone, and unfortunately, this wick stopped you out. If you put your low below here and thought this was, okay, this could have been the entry. Again, once this wick closed, there's another entry potential, and there's another target potential. Okay, so we have this idea of where wave 4 is going to come to, all right? And then we see a big push to the upside. We see that new lower low being created. We see wave 1. We see the pullback of wave 2. There is another potential entry, all right? And then we could start to look to move the market. Now we see that this retracement actually didn't come below this 23.6 of this wave 4, which is a nice sort of potential place to look for the market to enter. And we ride it up to look for our target. Now let's have a look at for wave 4 target. Now remember, we had an extended third wave, so wave 5 tends to look or be a similar length to wave 1 or a Fibonacci ratio. Now generally what we see in wave 5 is either 61.8% of wave 1 if wave 3 is extended, or 1 of wave 1, so equals to 100% of wave 1. All right, in this case it does look like it did go a little bit over, so let's get rid of that. We know our wave 5 is, so now let's move on to see where this wave 5 has gone. Let's measure our wave 3. We need to measure our wave 1 first. Okay, so there's the 0 of wave 1. Now we can move this over to the end of wave 3. Okay, let's pop it over here. And we can look for potential targets of wave 5. So we can see wave 5 actually went almost all the way to that 61.8, but still taking that trade based off of this, right? Taking the trade based off wave 5 equals 100% of wave 1, okay? Taking that trade based off that. Now we know we've had our wave counts. We had our internal wave counts. We have got the A, B, C to the downside. We've got 3 to the upside, and we've got, if you remember, we counted inside, we've got 5 waves coming in here. So we know we've got a nice flat correction. The market is done. We had that, unfortunately, 2 stop outs, but we had a re-entry potential here once we rejected, or if you wanted to look for the entry based off of this wave 2 and your entry back down here on wave 1. So again, looking at this, it is roughly a 1-to-1 risk-reward ratio trade. Not the greatest trade out there, right? But nonetheless, it's still fairly good. But let's have a look and see if we could have tightened up that stop loss a bit more, right? So we can use the Fibonacci retracements of this wave 1 internally, okay? So let's have a look and see what that was like. So we'll zoom in, try and find it if I can. Was it over? Okay, so we've got wave 5. There it is. Okay, so let's have a look and see where this retracement. So we're looking at this structure right over here, that little structure. Okay, that's our wave 1, wave 2, and then obviously wave 3, wave 4, and wave 5 coming up. So let's have a look and see if we had any retracement levels to wave 1. Okay, look at that. Wave 1 hit exactly on the head, closed above this 50% retracement, just above 61.8, right? So if you want to be a bit risky, right? If you didn't really feel like risking 1-to-1 for this trade, you thought, okay, it's not really that much of my, it's not really kind of for me. You can look to obviously go to the 100% mark zone, which is roughly about up to here. I think somewhere up here for memory, okay? And then what we're looking for is that entry as this green candle closes above that zone, above that 50% zone. We can put our stop loss below the 61.8% zone and take profit up there, which is again another probably about a 3-to-1, just under 3-to-1 risk-reward ratio trade. Very nice clean trade using Fibonacci and Elliott Wave. All right, beautiful trade. Now let's have a look at the rest of this market's move. Okay, so we'll zoom it out and have a look to the move of this move to the downside. So we had wave 5, and now we've got this A, B, potential C pattern coming down, right? We've got this, this double zigzag, W, X, Y move to the downside. Now we need to see, like I said, we have to see what happens here. If we break this low, we can look at a potential triple zigzag pattern, all right? So let's have a quick look. Now remember when I spoke about that zone of the market coming in, also in the start of the video as well, we spoke about, we've got waves 1, wave 2, 3, 4, and 5. We have now the area of wave 4 playing out as well. So this is again another potential place to look to start for moves to the upside, all right? This could be another potential area for the move to go to the upside. Now if we break the low, again we have to recalculate our bias on the market, right? Or our view on the market. So let's have a quick look and see what we can find inside of the structure. Now again, we'll have a look at this A, B, C structures, and we'll break that down for the waves, for the corrective waves inside of a zigzag pattern. All right, so let's have a pop it over there. Okay. Actually, before we do that, I want to see the whole retracement for this wave 1 structure. The whole retracement for this wave 1. Let's have a quick look. I'm curious to see where it's gone to. So we can see it's sitting at that 38.2 retracement. Now, again, it's a Fibonacci ratio level, but like I mentioned, Euro USD, the retracement for wave 2, because remember we've got wave 1, wave 2, internal structures, all right, ABC structure then outside. Wave 2 generally tends to be a bit more deeper, so we could potentially be looking at any of these zones around about here for a potential retracement. Now, yes, it's a zoomed out daily time frame, so it's a long wait, right? It's a long wait. But if this market does happen to give us a triple zigzag pattern to the downside, or double zigzag pattern to the downside, we could look at taking an entry for a pullback, right? We could look at taking an entry for the pullback to move it back down to our zone to finish off this double zigzag pattern. Okay? So let's have a quick look. Let's have a look and see what we have inside there. Okay, so we've got an idea. We're looking for potential rejection on the zone or potential drop down into here, right? Based on our Fibonacci. Okay? Now let's have a look. 4-hourly time frame. Let's have a look at this initial drop down. There it is. There's our zigzag pattern, right? There's we can see 1, 2, 3 to the downside, 3 to the upside, and 3 to the downside, okay? Remember, we also looked at internal structures over here, so potentially we could have had the finish over here, but ended up being a bit of a scaling wave, all right? So we saw our internal structures. We got A, B, C down here. We got 3 to the upside. We got, again, 3 to the downside, okay? Was that right? Yes, 3 to the downside, 3 to the upside. So we've got our normal ABC, we've got our W, right? We've got our X. And now we had this move to the downside, ABC. We could have thought, okay, this could have potentially been our finished move, right? So we could have said, yes, WXY. We could have said, yes, this is the end of it. That's finishing this move. But then we had this break to the downside, okay? We had this big sort of move coming back down, right? We also had a 3-wave to the upside, right? Once we saw this and we saw the break of this low, we could have said, okay, something's not right. We can see now 5S going down. So this ended up being a bit of a scaling wave, like I said before. So we saw the wave 1, wave 2, wave 3, wave 4, and wave 5, and then start to move up, right? Okay, now this does get a bit confusing, guys, but like I said, the more we get into this series, I've got a little bit tricks for you guys to figure out if this is, if we got the right count, and we'll be using those indicators I spoke about in the very start of this series, all right? Okay, so let's have a look at this retracement over here. I'll get rid of this. Delete. I'll get rid of this. So we're looking for this sort of move to the upside. We're looking to see how deep this one's going to go. So we'll get our Fibonacci retracement. Okay, we can see. Let's zoom it in a bit. Get these candles out of the way. Okay, we can see here retracement went to 50%, right? And then we had a bit of a rejection and then a blast past. Okay, now this again is a nice potential entry for us, right? It's again a nice potential entry. So we see this 50% retracement. We see a candle close below that zone. Now we can say, all right, cool. Let's get our entry target. We'll get our entry right over here and stop loss just above here. Now, target-wise, guys, where do we look to place our targets? Remember, we're looking for a Fibonacci ratio to that previous zigzag wave, okay? So what we could look for, now again, usually, like I said, 100%, but sometimes it doesn't always play out that well, all right? So we had our entry, we had our stop loss, and now let's look for our target, right? Move up and move down. So you can see it actually hit just below that 61.8. Now this is a bit of an issue, guys, because if you were looking for this 100% move in the market, that could have been a bit troublesome, all right? That could have really struggled a bit. I just want to see something here, because we could have actually used this channel. No, even that didn't work either. Okay, so that's a bit of a downer, right? That's a bit of a no for us, or a bit of a pain, really. But we did end up hitting a 61.8% retracement. So really, it's up to you guys. If we did see, for example, now to manage this trade, right? Remember, we had the entry. We had the entry over here. We had our stop loss just above, all right? And we had our take profit target right over here. So take profit was over here. Now, obviously, take profit didn't get hit. But once we saw that this mark, remember, it is a retracement, guys. It's a retracement, so there's not a lot of strength in it. So once we saw this mark being hit, all right, we need to think, okay, well, something's not right. I saw the market close above that zone, right? We saw rejection. We saw close above that zone. Okay, we can kind of see a 5-wave count in it. Close above, we need to think, okay, well, something here is not going right. So let me rather close my trade, because I rejected on the 61.8% mark, right? Closed above it, the same we had with this retracement over here. We closed below that 50% mark, which indicated the market's ready to reject the zone and ready to turn around. We saw that happening here, all right? Now, remember, we don't see into the future. We don't see into the future, so we probably could have assumed that this was A, B, C, and now we've got 1, 2, 3, 4, 5, 6, 7, 4, 5 to continue further higher, all right? So that's, now we could have taken another entry here based off of this, and unfortunately, right, once we quickly, this is exactly sort of how we would look to trade Elliott Wave. So again, we saw the move coming down, we saw the close of the candle, entry potential, stop loss down here, right? And then obviously take profit targets based on our Fibonacci ratios. And then once we saw this move come to the upside, and we saw it pulling sort of all the way back down here, we've said, okay, something is not completely right, okay? We need to start looking at making to close this trade, because we know the rules of Elliott Wave. 1, 2, 3, wave 4 cannot go into the territory of wave 1, right? And we started to go into the territory of wave 1, which means looking to close that trade. We also saw struggles here, lots of struggling here, right? Which means there's not a lot of momentum. As we know, wave 3 tends to be the strongest wave. If there's struggles that much, we have a bit of an issue, okay? So trade managed, could have potentially taken a small loss or a break-even trade. Now we start to see the market push down. Now this is a bit of a difficult one, because we couldn't really, it's a bit of a difficult trade. We saw a lot of rejection, but let's use our Fibonacci to see what we were looking for. So again, we're looking for this as a retracement now, from the top to the bottom. We see the retracement, nice shallow retracement indicating a zigzag. We see it hit 38.2, right? Rejected a couple of times, big close below it. Potential entry target, right? Potential entry target. We take the entry, stop loss, target wise. Now again, remember we got burnt on the first one because momentum's slowing down. We have a double zigzag, so we need to think, where is this wave going to end? Is it going to go again to the 100%, or is it the same like the previous zigzag? Is it going to stop low at the 61.8% retracement? Okay, sorry, 61.8% extension. So we know now we've got our entry, we've got our stop loss. Where do we put our target? Okay, where can we put our target? Fibonacci expansion. Start from wave A all the way to wave B. Target zone 61.8, right? Didn't go all the way. Pretty much exactly the same ratio we had with this zigzag over here. So now we know. All right, well, if this thing's going to come all the way back down and come back into the zone, let's rather close the trade here. So entries we had our entry, remember? Entry on that close of that red candle. Stop loss just below that zone. Target over here. A nice, just over 1-to-1 R&R, maybe even 2-to-1 risk reward ratio trade. Again, very accurate and very nice, clean trade. All right. Now let's have a look to see what else we can see on this market. All right. So we just broke down this sort of structure. This is the one we're looking at, and then again, guys, we see a move to the upside. We see this three-wave move back to the upside. We broke a rule coming back down. So same situation we had back here. Broke the rule coming back down into the wave 1. So we know, all right, let's either close a trade or maybe take a loss because we broke that wave 3 into wave 1 rule. Sorry, wave 4 into wave 1 rule. So let's have another look to the downside. Okay. Now, generally, we don't really trade wave A, right? Like I said, we don't generally trade this first wave. We generally look to trade the second wave. So we don't look to trade this one. We look to trade this one, the second one, and that zigzag pattern, right? And now we've got our first one to the downside, right? We've got a retracement, and we're looking to trade the next one to the downside, all right? So we're looking to trade this one. Because we can't just take trades the whole time when we see any sort of sign. We have to wait for confirmation. Now remember, Elliotticians, guys, what do we trade? We trade wave 3, wave C of a zigzag, and sometimes wave 5. Now, with raw Elliott wave analysis, Fibonacci, and Elliott, and counting the waves, it's very rare that we can start at the very bottom of wave 3. Okay, it's very rare that we can start to trade. We can start to trade at wave 1. But with indicators that I've sort of developed, guys, towards the end of the series, we'll be looking at those, and we can look at how we can get in even earlier with more tools where we can take more advantage out of Elliott waves. So let's get rid of this. We'll get back into this last wave. So let's get our retracement. Now remember, pretty much every zigzag here, we've fallen short of the 100 mark zone. We're looking for that 61.8% move to play it safe. All right. So let's have a look at our retracement. Let's have a look. We can see we pretty much actually let's get the candles out as well so we can see a bit better. All right. We'll get these candlesticks out so we can see a bit better. Beautiful. Okay, now let's have a look to see where we can take this trade. We saw this rejection to the upside. We saw the three-wave, right? Nice, beautiful, just below 38.2. Nice rejection, right? So what do? We see a big engulfing candle take over. Entry over there, stop loss just above that zone, okay? Above this 38.2. Now to play it safe, guys, remember we could still see a rejection higher. So we need to make sure we place it above our fib zones if we're not using the count, if we're not really counting it to detail and using the fibs to our advantage, okay? Because this could have very well been an A, B, C, right? A little bit higher, right? Could have gone a little bit higher and gone past that, sort of past the zone, right? Or just below the zone and kind of stopped us out, or past this low, okay? Could have been a flat. So we need to use this 38.2 or the fibs as our areas to put stop losses. And obviously, remember, if you take a sell, we have to take in mind spread, right? Bid and ask zones, okay? So we enter over here, enter on the the engulfing candle, and take profit. Where do we put it? So we know we've got our entry, we've got our stop loss. Where do we put our take profit? So let's get rid of this, delete, and we can draw our expansion, extension to the low or the high, 61.8%, right? Like the previous 3 times, guys, the previous 3 times we fell short of the 100% mark, so let's use the 61.8, because every single time now we've learnt the first time, we've learnt the second time, and now we need to know for the third time, right? We've got an entry, guys, stop loss. Let's say we got stopped out, right? Let's say we got stopped out and we got another entry over here, which is perfectly fine, right? Now we've learned, okay, let's put it a little bit higher, just above that 38.2 mark zone, another entry, and take profit at 61.8, because third time lucky, right? Well, we've done pretty good the first 2 times, but this third time we are pretty confident in it, right? Take profit down here. Guys, look at this risk-reward ratio trade. Look at that. You know, let's have a look. I'm curious to see how big this R&R trade was. So we took an entry. We had our stop loss below. We took entry. Over here, we have look at that. Well over 3-to-1 risk-reward ratio trade. There's our 300 mark, right? Over the stop loss size. 300 mark, right over there. So this is almost double that. So we almost have a 6-to-1, 7-to-1 risk-reward ratio trade just based off of Fibonacci. Thanks to Fibonacci, right? It's beautiful. The previous ones we had 2-to-1, maybe a little bit 1-to-1, and then we get rewarded with this beautiful trade. Okay? How nice is that? Now let's move on.